welcome you all watching World Business Report here on News9 Live. I am Krishna Kumar. In a market reaction to the U.S. Federal Reserve's Chairman Jerome Powell's recent remarks, both the S&P 500 and Nasdaq saw an end to their winning streaks. Powell's statements seem to have reverberated through the financial landscape, and we need to get some expert insights on the implication of U.S. Fed Chief Powell's comments for both the U.S. markets and global markets. We tell you all about it in this Reuters report. Have a look.
U.S. stocks closed lower on Thursday, with the S&P 500 and Nasdaq snapping their longest winning streaks in 2 years, following hawkish comments from Federal Reserve Chair Jerome Powell. The Dow shed more than 0.6%, the S&P 500 lost more than 0.8%, and the Nasdaq dropped over 0.9%. The session began with a weak auction of 30-year treasuries, pushing yields higher and stocks lower. Then came remarks from Powell, who said central bank officials are not confident that rates are high enough to tame inflation. Despite those comments, investors are still pricing in a rate cut for 2024. But Kevin Nicholson, Global Fixed Income Chief Investment Officer at Riverfront Investment Group, believes a rate cut for next year is now completely off the table.
The expectation has been that we were going to see a dramatic slowdown of growth in the economy. But that is kind of hard to imagine right now, given the fact that in Q3, we saw GDP grow at 4.9%. So that means that we have to slow down. Not only do we have to slow down, but we have to slow down pretty rapidly to get cuts that soon. And I just don't foresee that happening at this moment.
In company news, shares of Walt Disney jumped nearly 7% on a quarterly profit beat, and as Hollywood actors reached a tentative agreement with major studios. And semiconductor firm ARM Holdings dropped more than 5% on a downbeat third-quarter sales forecast.
Apple, meanwhile, is facing a significant setback in its ongoing tax battle with the European Union. The EU has ruled against Apple, ordering the company to pay a staggering $14 billion in back taxes. And this decision marks a major blow for Apple as it underscores the increasing scrutiny on multinational corporations and their tax practices. Take a look at this.
Apple endured a setback in its fight against a $14 billion tax order by the European Union. An EU tribunal ruling in favour of Apple contains legal errors and must be reviewed. That's according to an advisor to Europe's top court on Thursday. Back in 2016, the European Commission argued Apple benefited from more than 2 decades from Irish legislation which artificially lowered its tax burden. But then 3 years ago, the EU's General Court upheld a challenge from the tech giant. It argued regulators had not met the legal standard to show Apple had enjoyed an unfair advantage. Now Advocate General Giovanni Pietruzella at the EU Court of Justice, or CJEU, is disagreeing. He says CJEU judges should set aside the General Court ruling and refer the case back to the lower tribunal. The original tax case against Apple was part of a crackdown led by EU antitrust leader Margrethe Vestager. It looked into deals between multinationals and EU countries that regulators saw as unfair state aid. Ireland said it had not provided any such assistance to Apple. The CJEU will rule in the coming months.
Spain's largest bank, Santander's chief Ana Botín, has now unveiled ambitious plans for a major push into the US market, and this strategic move marks a significant expansion for Spain's largest bank. So, what are the details and the impact of Santander's bold venture into America? This report tells you all about it.
We are thinking not just about the U.S. as a geography, but what is it that Santander can bring to the U.S. consumer, to the U.S. corporate customer? And so the 3 main platforms we're building in the U.S. is the corporate bank, is the high net worth, and is the auto with a digital bank. If I start with this last one, auto, we're number 5 in the US in auto lending. We're number 1 in Europe, number 1 in LATAM. We have, we just financing cars for consumers, where our customers actually are the OEMs, the auto manufacturers. On the digital bank side, what we're doing is transforming our bank here in the US to be much more efficient, to be much more competitive. We announced a very ambitious program, which is really changing the model, and we're delivering on that model. On the high net worth, again, playing to our strengths in terms of being very, very active in Latin America, probably number one, number two in the high net worth market with a Miami base. And on the corporate side, exactly the same. So we have been building our corporate bank since the last 8 years. It was the first global platform we built. When we talk about global platforms, is that we are actually building ones for the whole of Santander. We added we have 8,000 people working in that division, of which 3,000 have been hired in the last 5-6 years. We are reinforcing the US with a very concrete goal of supporting our customers in the US, which is a critical hub for our corporate customers, and a lot of interconnection with LATAM, but also with Europe.
Now, fashion brands, world-famous fashion brands like H&M are set to hike prices of their clothing apparel that are manufactured in Bangladesh, and that signals potential changes in the global supply chain of clothing apparel. What does this mean? Why is there a price hike for garments made in Bangladesh? This report tells you more.
Global fashion brands, including H&M and Gap, are committed to raising purchase prices for Bangladesh-made clothing. They aim to help factories in the country offset higher workers' wages. That's according to a US-based association representing more than 1,000 brands. Bangladesh is the world's biggest garments exporter after China. It has seen protests by garment workers recently over pay. This week, a woman was killed as demonstrations between police and factory workers turned violent. The Bangladesh government has mandated an almost 60% raise to the minimum monthly wage to $113 from December. It marks the first increase in 5 years. Factory owners had said the wage hike would eat into their profit margins by increasing costs 5 to 6%. Trade body, the American Apparel and Footwear Association, told Reuters brands would absolutely hike purchase prices to accommodate these rising costs. Low wages have helped Bangladesh build its garment industry, which employs about 4 million people. Ready-made garments account for almost 16% of GDP. Retailers in the US and Europe are the main buyers of Bangladesh-made clothes.
From fashion to cars, where Nissan and Honda are revising their forecasts upward as far as their profits and revenues are concerned, and that follows a notable uptick in sales. What's driving the upward-looking forecasts of Nissan and Honda? This report tells you more.
Nissan and Honda on Thursday said they expect higher profits this year than previously forecast. It's a sign of how Japan's automakers are seeing benefits from a weak yen currency and a recovery in sales. But that upbeat outlook is calmed by the various challenges they face in China, the world's top car market. Here, foreign brands face the rise of domestic rivals, the popularity of electric vehicles, and growing price competition. Nissan's CEO said that despite the continuing harsh conditions, the firm looks to put its China business back on a growth track. Nissan reported an analyst beating 127% jump in operating profit to $1.38 billion in the most recent quarter. And it raised its full-year forecast by nearly 13% to $4.1 billion, due to a favourable impact of a weak yen and improvements in global retail sales. Meanwhile, Honda raised its full-year profit forecast by a fifth to just below $8 billion. Japan's second biggest automaker also gained from the weaker yen and stronger sales in the US. This helped offset falling sales in China. Honda's quarterly operating profit rose more than 30% from the previous year to $2 billion, coming in just below analyst estimates. Both Honda and Nissan shares were up on Thursday.
Pharma major AstraZeneca has announced a positive outlook and boosted its profit forecasts as well. And what is this pharmaceutical giant's strategic moves going forward and factors contributing to its optimistic financial projections? This report tells you more.
AstraZeneca raised its annual earnings forecast on Thursday. Strong demand for its cancer drugs has boosted the Anglo-Swedish company. It also moved to improve its pipeline in the booming anti-obesity market with a deal costing up to $2 billion. The drug maker reported third quarter profit and revenue just ahead of analyst expectations. For the third consecutive quarter, strong sales of its cancer treatments and healthy demand in emerging markets helped out. It also offset the loss of sales of vaccines made for the global health crisis. The London-listed company also said it had bought an exclusive license for an oral weight loss drug candidate for up to about $2 billion from China's Ecogene. It aims to join what is currently one of the fastest growing pharmaceutical markets. AstraZeneca reported core profit per share of $1.73 for the third quarter, above analyst projections. Revenues of close to $11.5 billion also came in just ahead of forecasts. The company said it now expected better core earnings and total revenue than previously predicted. Investors liked what they heard, with AstraZeneca shares up over 3% before scaling back.
Now, this was for all PlayStation fans. The company that makes the PlayStation, Sony, is facing a profit decline due to a chip slump, and that's despite maintaining its PS5 or PlayStation 5 sales targets. So what are the challenges that Sony is facing, and what are its efforts to meet the demand for its gaming consoles? We'll tell you all about it in this report.
Sony's operating profit was down a big 29% for the July to September period. The Japanese tech giant was hit by a weaker performance at its image sensor and financial divisions. Profit for the quarter reached $1.74 billion, much lower than analysts had forecast. Its chips division was a significant sore point, with profit down 37% due to higher expenses and weaker image sensor sales. But there was better news for Sony's gaming division. The company hiked its full-year sales forecast for the games unit by almost 5% to $1.25 billion. It also moved 4.9 million PlayStation 5 units in the second quarter. Sony kept its sales target of selling 25 million PS5 consoles this financial year. The recently released Marvel's Spider-Man 2 offers cheer going into the key year-end shopping season. Sony said it had sold 5 million units of the game by the end of October. Sony maintained its full-year operating profit at $7.7 billion, but raised its sales and net income forecast by 2% each. Sony shares were down 0.8% on Thursday ahead of the earnings report. They've climbed almost a third so far this year.
SoftBank has reported a substantial $5.2 billion loss for the quarter, raising questions about the conglomerate's diverse portfolio in the first place. So what is behind SoftBank's financial downturn? What does it mean for SoftBank? Take a look at this.
WeWork is not working out for SoftBank. The Japanese tech group booked a $5.2 billion quarterly loss on Thursday, its fourth straight quarter in the red. It took a hit from the bankruptcy of the once high-flying WeWork, a company once valued at $47 billion. SoftBank also wrote down the value of tech investments. The results show the unpredictability of founder Masayoshi Son's strategy of betting big on often risky startups. The Japanese conglomerate said it was squeezed by weakness in the yen that drove up costs on its dollar-denominated debt. The $5.2 billion net loss for the 3 months to end September compares to a near $20 billion profit a year earlier. Its Vision Fund investment unit, meanwhile, booked an investment profit of $141 million in Q3 after posting a $1 billion profit 3 months earlier. SoftBank said it believed the group had seen the worst and was moving towards profitability. The downbeat results came even as it managed to achieve the initial public offering of its chip designer ARM. SoftBank said ARM would be the new driver of value for the investment giant.
WeWork clearly not working out for SoftBank. But moving on, here is a story of how an OTT giant is all set to make a true blue cinematic theatric move. Netflix is set for a $70 million makeover of a historic theatre. Now, take a look at this report and discover the streaming giant's plans for this cultural transformation and its broader impact on the entertainment landscape. Take a look.
It's incredible, and if you had seen the theater over the last couple of years before we were able to get in and do this work, you'd see it was showing every bit of its 100 years, and so be able to bring it back, and it's a beautiful movie house, is just an incredible point of pride for us.
It's even better than I thought it would be, because it was a long haul. The Cinematheque was having its financial problems. We're a nonprofit organization, and with the change in the world and the culture and technology, we were struggling. And then epitomized by the state of the Egyptian, which was deteriorating, as old 100-year-old theaters would. And even though we had spent considerable money renovating it, it still was not what we really dreamt it could be. Then fortunately Netflix came along and wanted to buy it and work with us.
Keeping it with the world of entertainment, Hollywood actors are rejoicing as a tentative deal with the studios have been reached to end the Hollywood actors' strike. So what does this tentative agreement mean for actors and Hollywood? Take a look at this.
And we're so happy right now. Like, I know I kind of probably look a little sad, but it's just bittersweet. It's melancholy, but it's just such a feeling of joy and of triumph over adversity and not quitting. I want everyone out there to know who's suffered, who's struggled and thought they couldn't do it. This shows that you can.
Well, first I'm gonna get drunk. I can't go to Disneyland because I'm broke because of the strike, thanks to MPTV. But once finances get situated, I'm gonna get a foot massage.
Oh my God! Oh, I love you too. Oh my God! The sacrifice is great, but the gains, because we have a contract, it's better than the last 5 contracts that we've ever had in SAG-AFTRA. So we made some really substantial gains this time.
Hey, let's make some real noise because we threw it down, we put in a good fight, and we proved what it takes when we come together with labor. Let's go! Am I ready to take a break? You're damn straight. But I'm going to keep it going if we need to. So now it's into ratification, and I think we're going to ratify this contract, no problem.
Now look at the joy in their faces as they're all set to go back to work. Now, meanwhile, Disney's latest financial results have boosted investor confidence in CEO Bob Iger. So why is the confidence back in Bob Iger, and what is the reasons behind Disney's success? Take a look at this.
Walt Disney exceeded Wall Street's earnings expectations on Wednesday thanks to eager crowds at its Shanghai and Hong Kong theme parks. The company posted third-quarter revenue of just over $21 billion. Disney's newly named Experiences Group, which includes its theme parks, resorts, cruise lines and consumer products, pulled operating income up by nearly a third from a year ago. Adding to the gains, it said Disney Plus brought in nearly 7 million new subscribers in the 3 months up to September 30th. It also slashed quarterly losses across streaming, which includes Hulu and ESPN Plus. All that offset a drop in advertising revenue at television network ABC and Disney-owned TV stations amid declining viewership. Shares in the company rose 4% in after-hours trade, signaling investor confidence in CEO Bob Iger's aggressive cost-cutting. In a statement, Iger said the results reflected significant progress over the past year, saying, quote, "While we still have work to do, these efforts have allowed us to move beyond this period of fixing and begin building our businesses again." Disney says its cost cuts are now on track to hit $7.5 billion. That includes thousands of jobs axed this year. Interim Chief Financial Officer Kevin Lansbury also said the company plans to ask its board to bring back a dividend payment to shareholders by the end of 2023.
All that joy for Disney has meant that Bob Iger, the CEO, has confirmed that they will stay invested in their streaming business right here in India. So we will look forward to what's going to happen with Disney Hotstar. But moving on here on World Business Report to the art world, where a Picasso painting has fetched a staggering $139 million at an auction. What is this high-profile auction all about? You need to know it because this is the second highest ever paid in history for a Picasso painting. Take a look.
Picasso, Femme à la Montre, an absolute tour de force from his 1932 Year of Wonders, and a masterpiece by every measure. Full of confidence, intensely vibrant, and brilliantly composed, this exceptional painting hung in pride of place over Emily Fisher Landau's mantelpiece. Tonight, it will find a new home. $100 million now. At $100 million. At $100 million, $105 million, for $121 million. Brooke, it's yours. Thank you very much. Panel number 36, thank you.
There were a lot of sales in the run-up to New York and a lot of anticipation.
Now, London's iconic Battersea Power Station is embracing the festive season with the return of its ever-popular ice rink called Glide. Take a look at this.
I think that you can't not get in the festive spirit when you've got these twilight trees, you've got the Christmas tree behind me, the twinkling lights, and I think there's a lot going on to make you feel like you're really in the mood for Christmas. Well, besides this absolutely stunning backdrop that we have here, there's so much going on. Obviously, we're the only riverside ice rink in London. We've got an absolutely stunning glasshouse cafe bar. We've been incredibly happy with the response from the public. They absolutely love coming down to these events, as was shown last year, and we're expecting no different this year. The tickets are absolutely flying off the shelf.
Yeah, that's all we have time for in this edition of World Business Report. Thank you so much for watching, but don't go anywhere. Keep it with News9 Live.